Today, as we've been pre-warning you through the week. So this afternoon's going to be incredibly low volume. We'll get onto that in a second. What I want to talk about, before we talk about the overnight stuff, we've had some movement in Chinese stocks specifically. A bit of movement perhaps in a positive way with regards to the German political stalemate with regards to forming a coalition. We'll just review very briefly Hammond's budget, but before all that, let's get to it because we've had some key data just announced. If I go to a short time period on my DAX chart, then the DAX has just tried to continue to edge higher. We've had a rebound this morning off what was initially quite a weak start to the session where we dropped down to 12,900 here. We've had a decent rebound and almost, reclaimed all of the losses since the morning. Now we've had some, this is perhaps the most important data of the day in many ways. Let me just switch to my data calendar just to show you. So obviously nothing this afternoon from the US, a couple of bits of Canadian retail sales figures, but that's not of interest for us. So all the data is front loaded here and a lot of it in bold on this calendar, and this is because we're getting updates on the PMI situation both on a manufacturing and a services basis in the big Eurozone economies, so France and Germany. So we've had the French and German numbers, we've had the German GDP data, we're going to get the European or the EU, I should say the Eurozone figures announced at 9 a.m. Okay, so that's the data still to come. But given we've had the two largest components of the Eurozone report their numbers independently, kind of means that 9 a.m. data is less market sensitive. So let's have a look what's happened. So firstly, we just had the German manufacturing print literally just announced a couple of minutes ago, and it is very powerful indeed. So we've edged up above 62 here, so 62.5. The expected reading was going to be 60.4, and compared to the previous 2 months where we've been around about 60.6. But as you can see on this chart, that's comfortably the best reading of the year, and more than that, go back 10 years. We are right now right up at the very top of the post-crisis rebound that saw us get around about to this area, 62.5. This is right the way back in 2010. You go maximum, don't know how far we can get back here, and it won't let me go back any further than this view back to 2008. But as you can see, basically it doesn't get better than this. For German manufacturing, it is on fire, and this has been a feature of 2017. If I zoom back in perhaps on the 1 year look, on the 12-month view, look at this nice solid upward trending pattern here. And this is a great, this is what's really been dominating global markets in 2017. It's the return to the table for European growth, and these manufacturing and indeed services PMI numbers are a very important part of investors' sort of macro assessment of how economic conditions are currently and how do we expect economic trends to continue in the future. And whilst this PMI chart trends higher, then investor optimism is going to be sustained. And so this is quite an important print here for November. It looks like, far from the nervousness about, can this really continue? Can PMIs remain above 60? Forget that, they've powered on above 62 now. Quite phenomenal stuff. So that's helped. Let me switch back. Well, actually, no, I'm not going to switch back to the charts yet. I'm just getting a pullback now on the DAX. Let me switch back. So, it's difficult to trade this stuff. If we go to a 1 minute chart just to really zoom in on how markets behave here. As I mentioned, this morning we had this drop down to 12,900. Really came around about 7:30. Back at 7:30, on the data front, I should say back at 7 a.m. when this market opened, we had the other bit of data from the Germans, and that was worse than expected. So Germany released their GDP figures. This is their second print for quarter three. Previously they'd said that growth was up at 2.6%, and that's on an annualized basis, and they've chopped it down to 2.3% on an annualized basis, When you're just looking at the quarter in isolation, the number remained unchanged at plus 0.8%. But on the annualized basis, you had a negative revision, which just kind of set the tone for the open, where we moved lower. If we just go to a longer time period, like a 15-minute chart, and we get in yesterday's session, we actually had a pretty big move to the downside yesterday. Really, it came out of nothing, in so much as there wasn't much news flow. I mean, any kind of political developments in Germany, if anything, were positive as we perhaps move towards this idea. And again, overnight, we're looking like we're moving perhaps towards the idea of this grand coalition between Merkel's lot and the SPD might be back on. So if anything, the political situation improved, but we had this general negativity that really opened up and accelerated into the European close. You know, most of this loss came in the final 1.5 hours of the European session. We hit the European close, things flattened off. We dropped again off the open this morning. Now we've rebounded. It's a bit messy. We didn't quite get back up to test the high point from last night, which is right on the 13,000 handle. But now we've had some positive data. Initially, the market popped higher, and now we've pulled back a little bit. But that should really put a floor here on the DAX, I would say, for today's session. It should bring to an end this negative bias that's been the feature from yesterday, because that is a very powerful manufacturing number. However, the one thing that's the problem for the DAX, and perhaps the one single thing that you can point to that helped to the DAX's downside yesterday, was this chart, which is the chart of the euro. And this is the euro versus the dollar. And we had a very positive session yesterday. And as we kind of broke into the final hour and a half of European trade, the euro-dollar stepped higher. And then last night it stepped even higher, and we broke above the Monday highs. So new highs for the week last night, and we've stretched up, and we've just edged again higher. So the euro is powering on. And in the end, that's bad news for German exporters. So in the end, whilst the manufacturing number here looks looks very, very strong indeed, any further upside on that euro is going to hamper any kind of major kind of strong moves higher for the DAX. So bear that in mind. Whilst we're on the DAX and thinking equities, let's look at the S&P, because if you put these charts together on the same time period, let me just do that. If we look at 15-minute, let me look at a 30-minute on the S&P. When you're looking here, so on the S&P, I'm looking overnight, and then look. So yesterday's session is kind of top, the kind of left-hand half of this chart for the S&P. Whereas you look at the DAX on the left, and very, very different sessions. Both kind of had a negative slant, but the DAX dropped, 200 points yesterday. That's a huge move. Whereas the S&P drifted, like a couple of points lower. So definitely Europe underperformed quite dramatically yesterday compared to US equities, and this is probably a feature of the exchange rate movement that we saw euro versus dollar. Let's quickly flick back, have a look at some charts. So with regards to the manufacturing from Germany, quite phenomenal, huge print, but basically the best it's ever been, if you want to put it in simple terms. Let's go to the services. Services slightly, not as powerful. So actually this number from Germany slightly disappointed. We expected 55, but it came in at 54.9. Still solid, still well above 50, of course. With these PMI readings, all you're looking for is something above 50 to indicate that economic conditions are in expansionary mood. The further above 50 you get, then the faster that expansion. Okay, so anything around 55 is nice and solid. The best it's been this year is about 55.6, so we're only just below that, but it is, we're off the high points of the year here, but still, particularly for Germany, the manufacturing side is powerful, and that was a huge number. Let's talk about the French then, because their numbers got delivered back at let me get this right, 8 p.m. So let me show you the French chart. And I mean, such is Europe's positive trend this year in 2017. Even the French are getting some phenomenal PMI numbers here. I mean, this has been, France has significantly underperformed. If you take the last 10 years since the crisis, the French economic engine has been on stall speed for pretty much the entire period. But now even France getting in on the act and, enjoying this revival in what is, of course, one of the world's biggest economic regions. And so, this is very positive for the global sentiment. So France's PMI stepping quite substantially higher here. Huge beat. 57.5, we were expecting 55.9. If we look back on the maximum, we can only go back. Okay, this doesn't let us go back very far here, but takes us back to, okay, it's similar to Germany. For France, it basically doesn't get better than this. So very powerful. On the services side, the French number actually came in above 60. So France not only getting strong manufacturing numbers, but got a very powerful services number to match it. So very strong data here from France. Perhaps these PMI readings, which essentially are soft data, maybe this Macron sort of revival along with the broader momentum across the continent is really feeding into finally some real optimism and positivity about the direction of the French economy. So strong data to get the session up and running. I'd say keep your eye on this euro, keep your eye on the DAX. The DAX trying to reclaim the highs. The 13,000 handle is important for the DAX, anything above there, and we're really starting to then eat into those losses from yesterday with the pivot at 13,040. Okay, let's switch back. Screenshot. What's been going on overnight? Some of the headlines. Well, the dollar had a bad day yesterday. I've just been talking about the euro and how it appreciated against the dollar, but actually everything appreciated against the dollar pretty much. Cable was higher, the yen gained ground, the Canadian dollar, the Aussie dollar, you name it. The US dollar weakened across the spectrum. This is a chart of the dollar index, and you can see this is a daily chart, so you can see on the right hand side here this red bar. So a big red bar, so definitely a very large down day for the dollar yesterday, and they've got a 100-day moving average on this chart. This is produced by Bloomberg here, and you've had a key break of the 100-day moving average. Technically a bearish signal, of course. So certainly the dollar on the back foot. Why is that happening is a harder question to answer. We had the Fed minutes last night, the FOMC minutes from their meeting 3 weeks ago, and what it kind of indicated was, most likely they're going to hike rates in 3 weeks' time at their mid-December meeting to round off 2017 and to deliver exactly what they told us they were going to deliver at the start of the year. At the start of the year, they guided us towards 3 rate hikes and a beginning of tapering of QE. And so they're going to deliver that. I think that's not important for markets. What is important is 2018. Still, they're guiding us for 3 hikes. But I would say, just as we inch closer to the end of the year, and just as Yellen is stepping down, all of a sudden you've had a very slight, and it's very subtle, dovish tilt to some of the comments, just questioning inflation. And is inflation going to be able to remain above 2%? Because here's the inflation chart for the US, and it's been a roller coaster year, of course. A nosedive down to 1.6%, then a rebound. It's just that rebound got pegged back in October, and I think that print, as we get the November data, of course we won't get November inflation data until just before that Fed meeting mid-December. We want to see, are we in for another drop below 2% here? Is this actually a wave pattern on a downward trend? So there's a real question mark over where inflation goes. We're bang on the 2% target. As we hit 2018, where is this thing going to go? Is it going to march back north? Fine. They'll carry on hiking rates, 3 hikes next year. Or will it slide back below 2? Are we going to head back towards that 2017 low at 1.6, in which case the Fed are going to find it very difficult to maintain their hiking cycle. So maybe as we get towards the end of the year, people are just questioning whether they're going to continue their cycle as intended or not. So maybe that's something. I mean, it's certainly not the case that we've had bad US data, because we have not. US data has been very solid. So it's quite a difficult one to put your finger on why the dollar has been so weak. One thing that certainly benefited, now that I've mentioned the weak dollar, one thing that certainly benefited from the weak dollar is commodities. So let's talk about crude oil. I'm just going to tidy up this chart actually and start again. I'm going to delete everything. Let's just have a look at this is the I'm going to look at a 240-minute chart, 4 hours, to really just sum up what's gone on in November. It's been a pretty, again, a roller coaster ride. Huge movement to the upside as November kicked off, and strong drive higher, which saw. Hang on, we got this chart into picture properly, which saw a huge rise back above $55, and ultimately we topped out on the 8th of November up at 58.14. This was off the back of kind of a move, some commentary out of OPEC, really saying, all right, the production cuts, we will extend them. And we had some inventory data that started to point towards inventories declining, and so this helped to step things higher. Then everything came sharply back lower. That move, first half of November, of course, was a move to a new 2.5-year high. Then we stepped back as Saudi said, maybe we might not extend cuts, and that saw us drop to $55, bang on it. Then we turned and we've reversed and we've moved back higher. And yesterday, it's perfect, almost perfect. Technically, yesterday we made a new 2.5-year high. It's just that we made a new 2.5-year high by 1 cent, by hitting 58.15, 1 cent above the 8th of November high. So of course this is just crude oil hitting that key resistance, and for now that's just halted things in its tracks. The dollar weakness has certainly helped this week, as well as the comment yesterday was there's now, according to OPEC analysts, a 90% chance that next week OPEC and Russia will extend their production cuts into 2018. Okay, so I would say as long as the dollar stays on the back foot, I would still expect I'd still favour the upside here. Now I know yesterday it was tricky. We had the inventory data, and ultimately the inventory data, well, on the face of it, showed a drawdown, of course. If I zoom in a bit more, let's go to a 15-minute chart. Showed a drawdown, but the drawdown was nowhere near as big as the API had indicated the night before. So we had actually initially a sharp move lower on crude before that bottomed, and we sharply reversed, and then we moved higher. The other bearish thing for price was actually the overall crude oil production, the daily production. Millions of barrels per day hit a new 50-year high essentially, so that's negative for price, but didn't matter. I think the production cuts are still the main thing people are looking for. The dollar weakness is helping to support price, and if oil couldn't sell off yesterday afternoon, then that definitely indicates that this market is in bullish mood. Yes, we've got a key resistance, 58.15, currently the November key double top. But if we get back to test that today, I'd expect it to break. Gold's the other one that's been enjoying this dollar weakness. So gold's been moving steadily higher through the week. And if I go to a 120-minute chart here, then the technicals to be aware of for gold is that high point we had back end of last week, just shy of the 1300 handle. So they're the things to look for on the upside. If we have another addition to the upward trend today, then of course yesterday's high at 1294, 17th of November high at 1297, and then the 1300 handle. Okay, what else? China, we've had some downside for Chinese stocks. That's one of the headlines here. You got to love the media, how they report this stuff. China stocks plunge, and they did drop quite sharply, but then they bounced quite a lot as well. But they were down 2.3% down 2.7%, I think, at one point, but then retraced. There doesn't seem to be anything specific, just a bit of profit taking, I think. but that's certainly a headline that's getting some traction. It's more for want of something to write about than anything else. I don't think there's too much in it. Just with regards to the German situation, here's another headline that's kind of doing the rounds this morning with the SPD party. Apparently they're back open to talks on new Merkel government. Okay, so maybe we're heading towards that idea. Let's briefly talk about the budget. I guess here in the UK, Hammond delivered the budget. The big news was actually the alteration of GDP growth forecasts out over the next 5 years, and they just really got slammed. I mean, this is the OBR. That's an independent body. That's not a political. They've got no political bias here. This is the OBR reporting and analysing and saying, right, we're chopping growth forecasts. And look, this is based on what we're looking at. This chart is comparing how they forecasted growth in the next 5 years in March and how do they now forecast growth over that same period now in November. And as you can see, this year for 2017, they thought GDP growth would be 2%, they've chopped it to 1.5%. Next year they've chopped it from 1.6 to 1.4, the year after from 1.7 down to 1.3, and so on. So basically they think the economy is it's going to average 1.5% growth for the next 5 years, which is pretty lame in terms of a growth rate. You know, we need average growth above 2%. Obviously this is tracking through the Brexit period, so one thing you would say is it's pretty impossible to actually predict this. I mean, it's almost pointless, I would say, trying to forecast GDP growth for 5 years as we go through one of the largest changes politically that this country's ever been through, and we are not yet anywhere near clear on how that might have an impact on the economy during this 5 year period. So whilst fine, it's fairly academic. I mean, I wouldn't pay too much attention to these figures, to be honest. And actually, that's what markets did. They didn't pay too much attention to this either. In terms of borrowing, though, this does affect Hammond's borrowing plans. Although, of course, this is subject to change because how much the government needs to borrow is definitely a function of how strong the economy is. The faster the economy grows, the more tax the government get, which means the less they've got to borrow. So because GDP forecasts have been chopped, it means that the borrowing amounts for each year have gone up. So they've increased the amount of net borrowing. And so this is going to lead to the deficit in the UK not being taken down to zero as was intended, okay, over this 5 year period. But the deficit's well below 3%, so it's not too big of a problem. Other than that, it was a relatively uninteresting budget. Lots of commitments to building houses and helping first-time buyers get onto the housing market. Right, finally, it's Thanksgiving. Here's a slightly confusing, but the best one I could find, slightly confusing picture of the CME Globex trading hours for today. Slightly confusing because at the top they've got Friday here, but somehow they've managed to map the Friday sell right across Wednesday, Thursday. So Thursday's here. What really, to sum, basically all cash markets are shut. And what we have is we have an early close for equities. So for example, the S&P, let's say. So the S&P 500 futures trading on the CME will close at 6 p.m. London time. So that means it will absolutely shut. The index will close for trading. Okay, so bear that in mind. It's the same for most things. FX will shut at 6. Interest rate markets will shut at 6 p.m. Energy and metals will shut at 6 p.m. Okay, so basically these markets are open for the European session and then they're closed. However, as I pointed out to you earlier in the week, when you're looking at volumes this week, let me add volume study to my chart here for the S&P. This week is always normally the third lowest volume week of the year, third only to the Christmas and New Year weeks. Okay, so this will be the lowest volume week of 2017 so far, and most of the reason for that is today and tomorrow. So what's going to happen most likely is that you're going to get markets just almost effectively just switch off, and it might happen even sooner than lunchtime from a volume point of view. Yes, we've had some decent data and numbers here from Europe to get things going and spice things up for this morning, but the data then dries up. I mean, the last piece of European data we've got is coming, well actually, sorry, we've actually just had it. Sorry, I've spoken over it. It's the European flash PMI numbers. As expected, came in better than what was forecasted, and that is due to the German and French numbers that came earlier. So you're not going to really get much reaction to these. So actually, from a European data point of view, we got some UK figures at 9:30 where we're going to get the second reading for Q3 GDP growth, and then that's it for data. Of course, we've got ongoing actions in Germany with regards to the political situation, so maybe we'll get some news flow on that from the SDPs, for example. We've then, of course, got anything out of OPEC in terms of OPEC comments. But other than that, I'd expect this session to, wind to a relatively quick halt, and certainly this afternoon, you're not going to find many traders at their desks. So volume's going to be nothing, and most likely market activity will also be virtually nothing. Okay, that's it from me for now, guys. Enjoy the Thanksgiving session, and we will be on the mic as we go through the morning. All right, enjoy the day. Thanks.